Hello friends. In our last video, we discussed or we saw how to do a simple prompting for analysis of balance sheet that can be used for somebody who doesn't know who doesn't have any finance background. In this video, we will be continuing to see prompting for common size balance sheet. Before we delve to the main topic, on the screen, whatever you see is the tick mark ones are the ones which we have discussed so far in the past videos. And the green color topic is the current topic. As part of balance sheet, we'll be covering 4 kinds of analysis. Within that, the present video is on common size balance sheet. So let me give a very brief overview of a common size balance sheet. See now the sample balance sheet what I have in my hand. You see year on year there are some changes. Like some components have increased, some components have decreased. Like plant property and equipment has decreased from 2020 to 2021. Basically, they are not numerically comparable. To make it numerically comparable, we try to reduce this balance sheet on a factor of 100. So this is also called as vertical analysis, where the total analysis goes to the denominator and every other component of the balance sheet goes to the numerator, and we arrive at the percentages such that some of these percentages sum up to total assets or total liabilities. It doesn't matter whether I use the term total assets or liabilities because both of them match in the balance sheet. So now we move to the prompting part. Let me make the screen a little bigger. So I attach this 10 years balance sheet of McGirt Russell, and the prompt what I'm going to use is common size balance sheet. Friends, all these prompts are now available in my website as a downloadable Word file. So you need not take the pain of converting this image to a video image to a prompt for that. Just visit my website and you can get the downloadable balance sheet. So let me explain the prompt. I'm saying I have given you a 2 years balance sheet. Create a common size balance sheet where each line item is expressed as a percentage of total assets. It is not that ChatGPT doesn't know how to do it, but I prefer to be structured. That is the reason. So what are the 3 things? Include year-on-year percentage change. So that I'll show you in the output part. Format the output as a table and ensure that the percentages have 2 digits. Okay, let me run the prompt and see the output. Okay, so the common size balance sheet has come up. If you remember, the first point was include percentage point change column to highlight financial shifts. So this is the column which shows how much percentage there is increase or decrease. Okay, so that is what I wanted in the that what I mentioned the structure prompt. So everything like total current assets are 100%, and every other line item has been based on a value of 100%. Similarly goes for liabilities also, that is also equal to 100%. Now this mere percentage, somebody who is an expert in common balance sheet, now what they'll do is they'll pick up the major changes or the major components to see where out of this 100%, almost 90% is in non-current assets. So that kind of analysis they do. In that, you see, almost loans are around 64%. So these kind of insights you can get from the common balance sheet, and for somebody who knows analysis. For you, say if you're not so confident on common size balance sheet analysis, now you can put the second round of prompt saying that, hey, from this analysis, identify major trends which are increasing and decreasing. I'm most focused about assets like cash increase or decrease, inventory decrease, growth in liabilities, whether there's a long-term borrowing increase, etc., as well as any flags like steep increase or decrease in debt, diluting equity, any liquidity rate track, and so on. This is the second round of prompt which I'm going to introduce here and let us see the output. So this will help you to, this now gives a detailed output saying that cash reserves has increased. Then it gives some inferences also, like reduce fixed assets, saying that there could be potential, it has sold some assets. That's what it means. It has sold some assets. Then increase in financial liabilities. Its short-term liabilities has increased around 4% roughly. Overall increase in total current liabilities. Then what are the warning signs? I have asked about any warning signs. So all this gets listed here for you to infer from the common size balance sheet analysis. The common size balance sheet you can get somewhere from a website, or you yourself put it in Excel and get the output, but that's not important. Getting the inference is very much important. Okay. I can extend this analysis by asking warning that faster increase in current liabilities compared to current assets, liquidity risk. Please comment on the investment worthiness of this company. So let us see what view it has. It's on telling that cash has increased, but we don't know why the cash has increased. That's a separate part of the analysis. Concerns, there are a lot of concerns. See, good points are very few. Okay. Concerns are not many. And whether it is for short-term investors, it is a very high risk. Even for long-term investors, it's a cautious approach. Final call, not investment worthy for now. So based on the balance sheet, whatever you have given, the model decides that based on the balance sheet and the common sense analysis it has model has decided that it is not investment worthy for now. So friends, in the next video, we will come back with the next topic on ratio analysis and inferences. So till then, bye. Thank you.